45 years, 0 name changes, new offices, more staff, improved technology to better serve you. Education, services, investments. Think real estate, think Marshall Reddick. Brokerage, property management, private lending, creating financial independence through real estate since 1979.
Alrighty, hello everyone, welcome. Thank you so much for joining us tonight for our Private Financing Simplified Bridge Loans and Non-Recourse Options webinar. My name is Stephanie Miller, Private Lending Manager here at Marshall Reddick. I have my direct contact information on the screen. I see a lot of new faces or names rather on tonight's call, so I would love to hear from you. I spend a lot of my day on the phone running through scenarios with various people, and so would love to hear from you and discuss your real estate financing needs. So again, cell phone, email address is listed on the screen. Please take note of it and feel free to reach out. Before we dive into tonight's presentation, I wanted to take a couple of minutes to go over what Marshall Reddick does overall. So Marshall Reddick is a one-stop real estate shop. We have 3 different services that we offer, the first being real estate brokerage. So we help people buy and sell both primary and investment properties in all of the markets that I have listed on the screen. We also assist with property management services, so everything between tenant placement and collecting rent and maintenance management. We can help you manage your investment properties in these various different markets as well. And then we also offer private lending. So in addition to the private lending that we offer in all of these markets that I have on the screen, we also can lend in all of these different various states. So the previous map was all of the markets in which we have a brick and mortar office and can help with brokerage, property management, and private lending. And then in addition to those states, we can also lend in all of the states that I have highlighted here. If there are any states that aren't highlighted on the map that you're actively doing business in or actively, needing solutions for your real estate investment property, feel free to reach out. Can't promise that we're able to enter a state that we're not currently in, but it's a possibility. So would love to discuss if that's a possibility if you're actively doing deals in a state that's not highlighted here. So tonight's agenda, we have a jam-packed presentation. The first thing we're going to go over is what exactly is private financing, right? Let's define that and how is it different from bank financing? And why are investors turning to private financing more than ever before? We'll go over how you can utilize our private financing to scale faster using our no red tape approach. We'll go over our bridge loan program specifically. We have various different programs that we offer here at Marshall Reddick, but we'll specifically go into the bridge loan program tonight. We'll go over how all of our programs are non-recourse eligible, and we'll define non-recourse and exactly what that is. We'll go over our underwriting process, so everything from A to Z, from loan application to underwriting to actually closing your transaction. We'll go over the overall process there. We'll go over some recently funded deals, specifically some recently funded bridge deals that we've done in the last couple of months and exactly how we can help, fill a niche space that a lot of other lenders out there can't fill. We'll have some time at the end for some frequently asked questions, and super exciting, we'll have a promo code at the end that you can use if you, do your first deal with Marshall Reddick. Would love to offer you a discount to try us out. So what exactly is private financing? Well, just, high level definition, it's the lending of money to an individual, company, or organization by a individual, company, or organization, right? So there's a lot of different private money people out there, right? You've heard of payday loans, you've heard of automobile title loans. In our case here at Marshall Reddick, we offer real estate loans, right? So all of the private loans that we make are all backed by real estate. And so we don't do any unsecured loans or loans securing anything else beside real estate. How exactly is private financing different than traditional financing? First and foremost, probably the biggest difference is we don't sell our loans at Marshall Reddick, right? So traditional lenders like Bank of America and Wells Fargo and CMG, they all sell their loans, right? They sell their loans to Fannie Mae and Freddie Mac, and that's important because they don't only have to adhere to their guidelines, but they have to adhere to someone else's guidelines, right? So whoever the end investor is that is buying their loan, they have to adhere to their guidelines as well. A lot of other private lenders nowadays also sell their loans in in the secondary space. So they not only have to adhere to their own private, financing guidelines, they also have to adhere to someone else's. And so at Marshall Reddick, we don't sell our loans. We're what you would call a balance sheet lender. So we hold all loans to term for the most part. And so, we only have to adhere to our own guidelines. That's important because we can, take a common sense approach to our financing, right? Let's say the deal overall makes sense, you as a borrower overall makes sense, and there's just, maybe something odd as a part of the deal that just, for whatever reason doesn't fit our normal box. A lot of times we can make exceptions and, make sure that we can get your deal done as long as, again, it makes sense and it's reasonable. We don't require a hard credit pull, right? So a lot of traditional lenders, actually all traditional lenders, right, the Wells Fargos and Bank of Americas of the world, as well as many other private lenders, are going to require that hard credit pull. So it's going to report to your credit. Marshall Reddick only requires a soft credit pull, right? So it's not going to ding your credit because someone checked it, and we're not going to report to credit. It's just a soft pull that we pull. We also don't require a personal guarantee. Other traditional lenders and private lenders out there are going to require a personal guarantee, and so you're going to have to personally guarantee the loan. Marshall Reddick, for the most part, does not have personal guarantees. So if you're borrowing in the name of your LLC, or if you're borrowing in the name of a corporation, the LLC or corporation is going to guarantee the loan, not you personally. We also don't have substantial documentation, right? I don't know how many of us on the call tonight have been through a bank loan, right? A conventional loan, and they just ask for loads of documentation, right? Every day it seems like there's, additional requests. At Marshall Reddick, our documentation is super light, and we only ask for, a very minimal select documentation. So it's going to save you time and headache there. We're also non-recourse eligible. This is huge, right? Traditional lenders and a lot of other private lenders out there are not non-recourse eligible, and they can only make recourse loans. Here at Marshall Reddick, we can make non-recourse loans. All of our programs are non-recourse eligible for the retirement borrower, so that's super big value add in working with Marshall Reddick. So right out of the gates, a couple of important things to note about our private financing. First and foremost, we're non-owner occupied only, right? So we're only doing investment purpose, business purpose loans. So unfortunately, we don't have the licensing for owner occupied, so these are all non-owner occupied loans. Secondly, residential real estate only, right? So 1 to 4 units. We can break that guideline, right? I mentioned we're a common sense based lender, and so we can go up to 10, 15, maybe even 20 units if we're talking about a residential apartment building, but nothing when it comes to strip malls or warehouses or, hotels or anything like that. Residential real estate only. We also offer financing for purchase, refinance, and cash out refinance scenarios. So whether you're needing a bridge loan to purchase a new property, whether you're wanting to do a rate and term refinance and just simply replace the debt that you have against a property, or whether you'd like to tap into some of the equity that you have and do a cash out refinance, we can help in all 3 of those scenarios. And then again, non-recourse option for retirement accounts. So what exactly is a non-recourse loan? A non-recourse loan is required in the event that a retirement account is the borrower, right? A lot of people don't know this, but if you have a self-directed retirement account, whether that's a self-directed solo 401k or a self-directed IRA LLC, you can, borrow money through that retirement vehicle to purchase property, right? And the IRS states that if you're going to borrow money in your retirement account, it must be a non-recourse loan, right? The government has stated that retirement accounts are, protected entities. And so, if you're going to get a loan through your retirement account, it has to be non-recourse, which simply means the lender can't go after your retirement account to recoup any losses in the event of a default. They can only simply take back the property, right? And so since the retirement account is not guaranteeing the loan, a lot of not many lenders offer non-recourse loans, right? Here at Marshall Reddick, we do. So if you need a non-recourse loan because you're purchasing property in your retirement account, we can help. So how can you utilize non-recourse financing to grow your portfolio, right? There's a couple different ways. You can purchase 2 properties instead of 1. I've talked to many investors who didn't realize that they could borrow within their retirement account, and up until, today, they've only purchased properties in cash. Well, instead of purchasing one property in cash, why don't you purchase two properties and, you know, take a 50% loan to value loan against each one of them so that you can grow your portfolio. So that's something we've been able to help a lot of investors do. You can also cash out refinance to buy more property. Again, I know tons of clients who own property free and clear in their retirement account, and we've been able to do a cash out refinance so that they can tap into some of their equity and purchase either more property or tap into equity to invest in alternative assets, right? So maybe that's investing in mortgages, or maybe that's investing in, you know, a mortgage fund or something of that sort that isn't just in, you know, stocks, bonds, and the traditional assets. So what exactly does Marshall Reddick's common sense approach look like? Well, we went over this, but no hard credit pull, right? We only do a soft credit check. There's no verification of income in our employment, right? We don't care what your income is. We don't care if it's zero. We don't care if it's, you know, $1 million a year. We don't care if you're employed or unemployed. We don't care how long you've been with your employer, right? None of that is relevant in our collateral-based lending. We're not going to look at your tax returns or similar documentation, right? We are going to ask for a bank statement, but we're not going to source withdrawals and deposits like a traditional lender would on your bank statement. We just care that you have, you know, the money that you actually need to get the deal done, as opposed to, you know, where'd this deposit come from? Where did that withdrawal go? No debt to income calculations, right? We don't care about your employment, and therefore we don't care about what your debt to income looks like. And there's no appraisal needed in most cases. There are, you know, some cases that we would get an appraisal, but in most cases, we do not need an appraisal, which not only saves you time, but also saves you money. So none of these items are relevant in collateral-based lending. So what is, right? Well, first and foremost, borrower cash for down payment and reserves, right? If you're purchasing a property, we want to make sure that you actually have skin in the game and you can actually, you know, purchase the property with some of your cash. The collateral property value and location is important, right? Is it in a good market? Is it in a good location? Is it in a good school district? Are you purchasing the property for a good, you know, a good cost? Are you entering with some sweat equity? And also your background, experience, and/or plan, right? So the more background you have and the more experience you have in real estate, the better. However, you don't need background or real estate experience for us to lend to you, but you do need a plan, right? So if we're on the phone and you're talking through your, let's just say, fix and flip project, and you have no plan and you haven't done due diligence, well, it's probably going to raise a red flag. But as long as you've done due diligence and you have a contractor and you know exactly what you're going to do, we should be able to make the loan, no problem. So we take a much different approach, right? We have our own guidelines and we're built by investors for investors, right? Our private lending program was literally built by investors who have invested in everything under the sun when it comes to real estate and have experienced every single possible avenue you can when purchasing real estate. So we built this program to be investor friendly. Also, no red tape. We're also transparent and reliable, right? When you pick up the phone, you know I'm going to answer. You know my team's going to answer. If we're busy, we're going to call you right back, right? If you email us, we're going to respond. And real estate is a 24/7 game, and so you know, weekends, nights, mornings, you can get a hold of us, and you know, we'll make sure that your deal gets done. We'll also not bait and switch you. I can't tell you how many clients I've talked to that were bait and switched by another lender, right? Maybe they were reeled in because the lender had sweetheart terms and now all of a sudden everything's changed. Or maybe they were reeled in because, you know, the lender could close in time and now all of a sudden 3 days before closing, the lender needs more time. So we're not going to bait and switch you. If we're not going to be able to get your deal done, I'm going to tell you from the get-go so that you have time to go find another option if we can't get it done. There's just no sense in trying to have you put in a loan application and then us, you know, hope and pray that we can get it done. We're going to be very transparent with you. And then also quick closing timeframes, right? In a lot of instances, we can close in one week, 10 days, 14 days. So we have quick timeframes, and we know that a lot of times when you're purchasing a property for a really good deal, you've got to act quickly, so we can help accommodate. So our loan programs are built for all kinds of niche borrowers, right? We can borrow to or lend to individuals. A lot of other private money lenders out there will not lend to individuals. They'll only lend to entities. So that's not the case with Marshall Reddick. We can lend to individuals. We can also lend to entities, right? So whether you have an LLC or a trust or a corporation, we can also lend to you there, and there's no personal guarantee required. We can also lend to foreign nationals. For foreign nationals, there's no visa needed, right? We can lend to foreign nationals two ways. One, if you're going to borrow a loan in your personal name and you're a foreign national, you just have to have an ITIN number. So that's an international tax identification number. Otherwise, if you don't have an ITIN and you have an LLC or a corporation or some kind of entity that's registered in the United States that has a tax identification number, we can lend to you in that United States registered LLC or corporation or entity. And then again, non-recourse options for retirement accounts. So for those of you on the call tonight that have self-directed retirement accounts, whether that's a solo 401k or an IRA LLC or an IRA with, forged trust or equity trust or one of those custodians, we can help you as well. So we have several different loan programs here at Marshall Reddick, the first being renovation, right? So these are good for the fix and flip or the BRRRR investor. For those of you who aren't familiar with BRRRR, it stands for buy, renovate, rent, refinance, repeat. So a lot of those people that are looking for deals and putting some money into them to get their sweat equity out, we can help you with a renovation loan. We can also help with new construction, right? So if you're a small builder or have some kind of ground up new construction project that you're interested in, we can also do new construction financing. We just require that you own the land free and clear, and then we would help you with up to 100% of your construction cost. We also have our bridge programs, which we're going to primarily focus on tonight. Those are great for those wholesalers out there. Wholesale is another buzzword nowadays, similar to BRRRR, where a lot of people are purchasing property for a really good price. They're getting it under market value. They're simply closing on it, cleaning the property out, and then just simply listing it back on the market for a profit. So it's great for wholesalers. It's also great for unique financing situations, right? Maybe you need to close on a property really quickly and you need a bridge loan in order to purchase the property until you can get a conventional loan or a DSCR loan or whatever it is. So we'll go over some of those examples in a little bit, but our bridge program is super helpful for a lot of those unique circumstances. And then we also have a rental product, right? So DSCR, those of you who aren't familiar with DSCR, that stands for debt servicing coverage ratio. And that's really us just qualifying the property based on the rental income and the rent as opposed to, your financial background or financial wherewithal. To access any of our loan programs in real time, you can access in one of two ways. You can either go to marshallreddick.com, hover over borrow, and click loan programs. That'll pull up all four of our loan programs where you can download each individual rate sheet. Otherwise, you can go to marshallreddick.com/loan-programs, and that'll also get you to all of our loan programs where you can download each individual rate sheet. So again, go to marshallreddick.com, hover over borrow. You're going to see, a list of various different loan programs. And, if you get to bridge loans, you'd want to click download rate sheet, which is going to open you up into our full rate sheet, right? I mentioned that we're transparent. All of our fees and rates and terms and guidelines are all going to be available to you in real time. So specifically talking about our bridge loans, we have three different products we can offer. They vary from loan term, right? So we have a 12-month, a 36-month, and a 60-month option. So 1, 3, or 5 years. The interest rate is determined based on the term of the loan as well as the loan to value. So our 12-month loan is going to run 9.95%. Our 36-month loan is going to run 8.95%, and our 60-month loan is going to run 7.95%. A question I get asked a lot is, what is the difference between rate and APR? Well, the interest rate is the rate in which you're paying on the money you borrow, right? So if you borrow $100,000, you're paying 9.95% on that money. The difference between that and APR is APR is taking into account the loan fees, right? So if you have any loan fees, document preparation fees, processing fees, any loan fees that are associated with the loan, they're going to be expressed as a percentage under the APR so that you can see a more true cost of capital if you hold that loan for 12 months. All of our bridge loans are interest only, right? So each month you're going to be paying interest, and then when you go to pay back the loan, then you would just simply owe the principal back, right? So let's say you borrow $100,000 under our 12-month bridge program, you're going to pay about $829.17 per every $100,000. So we give you that as a good baseline so that you can easily estimate what kind of monthly payment you're looking at, whether it's $100,000, $200,000, $250,000 loan, you can just simply do the math. And then our loan to values are contingent on loan term, right? So our 12-month loan is the most aggressive. That's 80% loan to value or loan to purchase in a purchase scenario. Our 36-month term is going to be 70% of loan to value or loan to purchase, and our 60-month term is going to be 60% loan to value or loan to purchase. Minimum down payments do apply. So in the event you're purchasing a property under $100,000, our minimum down payments are going to come into play, right? So let's say you're purchasing a property and want to use our 12-month term bridge loan product. Well, your minimum payment is going to be $20,000 as opposed to 20%. So in the event you're purchasing a property under $100,000, just know that minimum down payments do apply. Anytime you're purchasing a property over $100,000, it's just going to be, the 20, 30, 40%. We do have a 1.0 DSCR requirement for our bridge loan programs, right? And so what that means is essentially the rent or the market rent of the property has to at least cover your interest payment. So more times than not, we don't ever run into an issue with the DSCR, but just know it's 1.0. Also, our bridge loan program is non-recourse eligible for those retirement borrowers out there. And subject to appraisal timing, we can close typically in 14 to 17 days. I mentioned earlier that a lot of times we can get an appraisal waiver, and therefore in many cases we don't require an appraisal. If we don't require an appraisal, we can definitely close sooner than 14 days. So just keep that in mind if you have, a situation that calls for you needing to close quicker than 2 weeks. Our 36-month and 60-month bridge product does carry an interest guarantee, right? So our 1-year bridge program has no interest guarantee or no prepayment penalty. So let's say you literally need the loan for 1 week, you're only paying 7 days worth of interest. Whereas if you're going to do a 3 or 5-year bridge loan, then we do have a 1-year interest guarantee or 1-year prepayment penalty, if you will, for the 3-year program, and we have a 2-year interest guarantee or 2-year prepayment window for the 5-year bridge loan. So big value add for the 1-year bridge loan, that there's no interest guarantee, no prepayment penalty, you can pay it off at any time. So a question I get a lot is, do you offer pre-approval letters, right? A lot of times when you're looking for property, the seller or the listing agent wants to see that you're approved if you're going to be using a loan to purchase the property. So to answer that question, no problem. We can provide a pre-approval letter. You just got to call me and ask. And then in order to provide you a pre-approval letter, just need a bank statement showing that you actually have the means to do the deal, loan type, right? Whether it's a fix and flip or a new construction or a bridge loan, the subject property address and the offer price. The reason why I want the subject property address and the offer price is because I'm going to tailor the pre-approval letter for that specific property, right? So the listing agent or the seller is going to actually see, okay, Miller Investments is qualifies for a loan at 123 Main Street in the amount of $625. The reason why I want the offer price is because I'm going to put the maximum loan as whatever offer price that you're making, right? We don't want to show the seller that you're potentially approved for more than what you're trying to purchase the property for. And so if you need a couple different rounds of pre-approval letters because you're negotiating with the seller, I'm more than happy to provide you with as many pre-approval letters as you need. I also provide my contact information down below because I encourage sellers and listing agents to give me a call, right? I want them to call me. I want to talk to them and say, yep, I know, Miller Investments, I've done deals for them before, or I haven't done deals for them before, but I've looked at their deal and will have no problem funding this loan on time for them. So encourage the listing agent or the seller or whoever to give me a call. More than happy to instill confidence in them. So once you've gotten a deal under contract, or if in a refinance scenario, you already have a property that you're looking for a loan on, the first step would be to input a loan application, right? You can get there one of two ways. So you can either go to marshallreddick.com, hover over borrow and click loan application. Otherwise, you can go to marshallreddick.com/borrow and it's going to take you to this screen. Once you're in the screen, you want to click private financing. If you click conventional financing, it's going to provide you the contact information for our preferred conventional lender, because we, again, don't offer conventional financing here, just private financing. So you're going to want to click private financing. And then once you click that, it's going to open up a little questionnaire that you'll want to answer, like 3 or 4 or 5 questions. And then it'll open up this screen, which will allow you to actually input the loan application. It takes all of about 10 minutes. It's more so information about the property more than anything, but nonetheless, you can fill this out online. Otherwise, a lot of times I can fill this out with borrowers over the phone and we can kind of talk through things, and I can do this for you on your behalf if that's easier. Once the loan application is submitted, we'll go through the underwriting process. And so the underwriting process is super simple, right? We're going to gather some documentation. So I'm going to reach out to you. I'm going to get, your purchase contract in the event it's a purchase. I'm going to get your closing statement in the event that it's a refinance. We're going to ask for photos, your bank statement, entity documents if you're, borrowing in an entity, otherwise driver's license if it's just, you personally. And then I'm also going to want to know insurance and escrow agent contact information, because we're going to reach out to both your insurance agent as well as escrow to introduce ourselves and let them know that we're working on this for you. From there, I'm going to assign what we call an investment analyst, right? The investment analyst is going to be who is going to get us through underwriting, right? So they might have some additional questions for you, but they're essentially going to be the liaison between you and underwriting to make sure that this gets through underwriting, that the underwriter's questions are getting asked or answered, and that they ask any questions that the underwriter might have of you. Once that's all figured out, we're going to pull comps and essentially value the property, right? We're going to pull comps for the current market value of the property. And in the event you're doing some kind of renovation to the property or construction, we will also pull after renovation value comps to determine the after renovation value. Once we've valued the property, we're then going to issue you loan terms, and from there ask any questions you have. But ultimately, once you say, yep, I'm good to go, we're going to then proceed to lock up capital and get to closing. So very straightforward, very simple underwriting process. It takes all of about a couple of days typically to get through underwriting once we have everything we need from you. So I want to take the next few minutes to kind of go over some scenarios in which we can provide a bridge loan, right? We have so many different unique circumstances that come through the door every day, and a lot of times we're able to help borrowers who don't have any other options, right? So this first one is on a multi-unit in Anaheim, California. The borrower originally was going to purchase this property in cash, but they ended up being a few $100,000 short, right? So you can see that they were purchasing it for $1.4 million. They were originally going to just bring in 1.4 in closing cash, but they ended up being a few $100,000 short. So we were able to step in and extend a $300,000 loan so that they could purchase the property, and they'll go ahead and pay that $300,000 back within the next 12 months whenever they have it. We were able to get them competitive terms. You'll see that it was interest only. The interest rate was 9.95%. Again, 12-month term. There's no interest guarantee. So had they paid this loan off in 5 business days after closing, they would have had no penalty. The next bridge loan that we recently funded was for a property in San Antonio, Texas. This borrower just needed $28,000 to do some renovation on not only this property, but another investment property that he owned. So again, this property he owned free and clear. It's worth $300,000 in its current market value. He only needed $28,000. We were able to get him that $28,000 extremely easily, extremely quickly, and for a great rate, right? He's paid 8.95% on the money. It's a 3-year term. In this case, there is a 1-year prepayment penalty, right? So if he pays off the loan inside of 1 year, he will get penalized. Otherwise, anytime after 12 months, he can pay off the loan with no penalty, and super affordable monthly payment at $208.83. So super easy way for him to tap into some equity that he had in a property property so that he could do some, required repairs of some other investment property that he owned. The next bridge loan example I have here was for a property in Columbus, Ohio. This one was a property that a client owned free and clear, and he was short to purchase a new property, right? He was going to purchase a new property and he was short on the down payment. And so, we were talking on the phone and he said, you know what, I own this other property free and clear over here. Why don't we do a cash out refinance on that property to get me the cash that I need for the down payment on this new property? And I said, no problem. So as you can see, super low loan to value, super, aggressive terms. This property was worth $265,000. He only needed to tap into $130,000 to get him the money needed for the down payment on the new purchase. And again, super competitive terms, 9.95% interest rate, 12-month term, no interest guarantee. It'll run him about $1,000 a month in interest. And again, he can pay it off at any time with no penalty. Another bridge loan that we funded recently was a non-recourse situation, right? This borrower wanted to purchase this property using his retirement account. There were no lenders that could help him with the non-recourse loan, and so we were able to step in and help. So he purchased this property. It was in rent-ready condition for $206,000. We were able to help him with $144,000 in terms of a loan amount, so he brought in the difference. And he has 3 years to pay off the loan, right? So within the next 3 years, he's going to figure out how to pay us off, likely via a DSCR 30-year fixed refinance situation. So after 12 months, he can pay it off at any time with no penalty, and he has 3 years to pay us off. It was a win-win scenario for everyone. The last bridge loan I have as an example for tonight is another non-recourse loan. This borrower actually utilized a short-term loan to purchase this property because it needed some renovation, right? So we were able to help this person with a short-term fix and flip loan, and then at the end of the 12-month term, his loan was going to mature. He had, expended the dollars on the renovation. It was all rent ready, and so he was ready to refinance into a bridge loan. And so we were able to help him with a $322,000 loan amount against a property that appraised for $460,000, and he gets 3 years to pay off the loan, right? He didn't want to do a full term, 30-year fixed mortgage because he thinks he's going to sell this property in the next, 12 to 24 months. So the 3-year bridge option was a great option for him because he has 3 years to figure out exactly his exit strategy, and whether that's, selling like he thinks or refinancing into DSCR loan. So again, super solid terms at 8.95%. Interest only. His monthly payment's going to be $2,400, and he's still cash flowing greatly with the rent that he's getting from both units. This was a duplex. Next, I want to touch on some frequently asked questions, right? So now that we've gone over the different scenarios that would call for a bridge loan and some of the other, value adds that Marshall Reddick Private Financing adds, want to go over some frequently asked questions that I get almost on a daily basis. And so the first being, can I get a non-recourse loan if I'm not using my retirement account to borrow? The answer to that is no. So all of our loans are going to be recourse if you're using something other than a retirement account, right? We're only going to make a non-recourse loan in the event that it's legally required, right? And so if you're going to take out a loan in your retirement account, it's the IRS states it has to be non-recourse, and so in that case we will extend a non-recourse loan. But if you are utilizing a different vehicle as opposed to a retirement account, it will be recourse. Can I get a bridge loan if the property I'm purchasing needs renovation? The answer to that is actually no. However, we can still help, right? We saw earlier on our rate sheet that we have a renovation or fix and flip loan program, right? So absolutely can help you fix and flip a property or purchase a property that's in need of repairs. It's just, it depends on the intent, right? So if you're purchasing a property where you intend to renovate it, then we're going to have to set up a fix and flip loan for you. But if you're purchasing a property that, maybe even needs some work, but you're just literally going to clean it out and list it back on the market, we can help you with a bridge loan in that case if you have no intent to renovate. So if you are going to purchase a property to renovate it, then we can still help out. It's just going to be under our fix and flip guidelines as opposed to bridge loan. Can you give me loan terms ahead of inputting a loan application? Absolutely. So they're not going to be finalized loan terms, right? But a large part of my day is spent on the phone running through loan scenarios for folks, right? So let's say you have a deal that you want to run by me and you just want a ballpark estimate of, okay, Stephanie, what is this loan going to run me? What are the points? What are the interest rate? What is the down payment? What does all of that look like? I'm more than happy to provide you with a loan quote so that you can understand exactly what the financing is going to take. It's just not going to be finalized terms, right? So once I give you a loan quote, you go and get the property under contract. I can give you a pre-approval letter if you need it. And then once you determine that you're actually going to move forward with purchasing the property or refinancing the property if you already own it, then we can get a loan application submitted from there so that we can get the loan underwritten and ultimately get you finalized terms. But to answer the question, absolutely, I can at least get you a ballpark estimate ahead of you actually getting something under contract or pulling the trigger with a loan application. And finally, where does Marshall Reddick get the money to originate these loans? The Marshall Reddick gets their money a couple of different ways, right? We have third-party capital providers who, instead of wanting to own rental property, they simply want to become the bank and, become a mortgage investor. We get the money from those direct capital partners. We also have a mortgage fund that we have investors invest in, right? And so it's actually a great avenue, whether it's you're a direct capital partner or a mortgage fund investor. It's a great avenue for your self-directed retirement account. So if anyone has interest in what it looks like to become a trusted investor or invest in our mortgage fund, I would be more than happy to schedule a call with you to go over what that looks like, what the returns are, and that type of thing. So we get our funds from either our mortgage fund or direct capital partners. As we wrap up tonight's presentation, I would like to give everyone a promo code to use on your first deal. So if you mention Bridge 2025 when submitting your first loan application, I'd love to give you a 1/4 point off your first transaction. So would love to establish a relationship with you, run over whatever loan scenario you have for your project or your scenario, and would love to give you a discount as part of that. So again, mention Bridge 2025 if you have a loan that you would like to get started on, and I would love to give you a discount. With that, that's everything that I had tonight. Again, my name's Stephanie Miller, Private Lending Manager here at Marshall Reddick. I have my direct contact information here on the screen. Please take note of it. Don't hesitate to call or text. This is my direct cell phone number, so would love to hear from you, run through details, answer any questions that you may have. So again, don't feel free to reach out and don't hesitate to reach out. So again, Stephanie Miller, thank you so much for joining me tonight, and I look forward to hearing from you soon and helping you with all of your real estate financing needs. Hope everyone has a good night. Bye.